Welcome to the focusIR Fireside Chats with me, Karl West. I will be bringing you interviews with fund managers, economists and analysts. Plus, we'll be sitting down with the founders, directors, CEOs and company chairs that make things happen in the boardroom. I hope you enjoy the show. I'm joined today by Thuy Anh Nguyen, product specialist at Vietnam Enterprise Investments Limited, or VAIL, which is a FTSE 250 investment trust focused on the growth opportunities offered by the booming Vietnamese economy. The £1.3 billion fund run by Dragon Capital Management has 35% invested in banks and financial companies, with around 20% in Vietnamese real estate. Thuy Anh joined Dragon Capital in 2024 and was previously head of capital markets at Novaland in Vietnam, before she then spent nearly 13 years at Credit Suisse in both London and Hong Kong as director of foreign exchange and interest rate structuring. Thuy Anh is a graduate in economics and management from the University of Oxford, and welcome to the show, Thuy Anh.
Thank you very much, Carl. Thank you. It's lovely to be here. And thank you for that lovely introduction, and also for your perfect pronunciation of my name.
Thuy Anh, in the research, I was looking at the economy of Vietnam, which I think we know is going very well. And the Vietnamese government has an ambitious target of 10% GDP growth in 2026, up from about 8% last year. Is that realistic? And which are the fastest growing sectors? I'm guessing that the structure of the fund gives us a little hint at where you see fast growing, the fastest growing bits of the economy, i.e., banks and real estate.
Yes, so, for the last couple of decades, Vietnam has managed to grow at an average of 6.5% GDP growth. Last year, when the government said the target for growth in 2025 was 8%, everybody thought, wow, that's pretty ambitious. How did, but they managed to achieve it. And now they step it up again. They want to accelerate GDP growth into the 10% this year and for the next for coming years until 2035. And again, like you say, everybody thinks it's very ambitious, but our colleagues at Dragon Capital, we have crunched the numbers. We think that the target is achievable. And the economy of Vietnam is driven by three main engines. One is export. That has been the story for the last couple of decades. We benefited a lot from China Plus One. The other two engines are domestic consumption and investment. Now we'll be seeing increasing strength from the two domestic oriented engine, which is consumption and investment, but the export story is still going strong. But what is really going to enable this acceleration into the 10%, and in fact the 8% last year as well, is the fast and furious reforms that is going on in the ground. So last year, the government started a program of reform that is so sweeping that it has been called Đổi mới 2.0. Đổi mới 1.0 was in 1986, when the government started to move from the centrally planned economy into the free market economy and allow trading with the rest of the world. And now 40 years later, it's another sweeping program of reform, this time aiming at not just allowing private enterprise, but putting it at the front and center of the economy and creating the condition for the private sector to thrive. And already last year, the government started with its own efficiency drive. So they merged provinces and reduced the number of provinces from 64 to 33. They cut the number of ministry from 19 to 15. They cut their own workforce by 20%. And all of this was done within the space of a few months in 2025. That was one of the reasons for for growth to achieve 8%, right? And what we are seeing on the ground is that businesses and consumers have bought into this vision, and all measures of business and consumer confidence are at the high, at the 3-year high.
Yeah.
Earlier this year, in January, the General Secretary, who is the leader behind all of these reforms, has been reconfirmed by the National Assembly for another 5-year term. So that means that there is even stronger mandate for this reform. He is very likely to become president as well. That will be announced in the next. The results should come out in the next couple of weeks. But so that is really, in our view, the secret source for this acceleration of GDP growth into the 10%. The government reform.
Yeah. And what about sectors? I mean, as I said there, your fund, as I said, 35% in banks and financials, and something like 20% in Vietnam's real estate. Are those presumably that's because you see that those are the fast growing sectors at the moment because the economy is doing well. I mean, that's normal, isn't it, for an economy that is growing at 8 to 10%, is for those sectors to be quite prevalent.
Yes, absolutely. So as I briefly mentioned earlier, the main engines for growth for the Vietnam economy will be very much focused on the domestic economy, and at the center of it is the consumer, right? Vietnam has a very young population, very large population of 100 million people, 70% of which is in the working group of 15 to 65. And so consumption is going to be very important. And bank is a big part of our VALE portfolio because everything go through the banks, right? Vietnam, the capital markets is not as developed as if you think about a more developed economy like the UK, for example. You have many sources of different sources of funding, from banks to bond to private credit, etc. But in Vietnam, banks are still the main provider of capital for the economy and for businesses. Therefore, the banks, everything flow through the bank, government funding for infrastructure projects, credit growth. And then also there's the other side of it is the consumer economy, right? Cash is really not being used very much in Vietnam. Even if you eat a noodle soup on a sidewalk, on the plastic chairs that's eponymous there, you can pay by transferring with a QR code. There's QR code everywhere, and with the click of 2 buttons, your payment is done. Nobody really like cash anymore. So everything goes to the bank, and that is why we have such a large position in the banking sector. But of course, the banks are very carefully selected. We select the leader in the field. Each of the banks has its own unique story and is leader in their own field.
Yeah, sure. You mentioned investment there as well as a driver of the economy. Has the appetite to invest in Vietnam changed since the US imposed its tariffs?
Yeah, so 2025 was a very dramatic year. It's a roller coaster in terms of tariff, right? On Liberation Day, President Trump announced 46% tariff on Vietnam, and that was quite shocking. But the Vietnamese government, to their credit, was very constructive. They went straight to the negotiating table. In fact, the day after Liberation Day, the General Secretary sent a special delegation to the US to try to engage in conversation. And thanks to that constructive approach, Vietnam became the second country globally, just after the UK, to announce a trade deal with the US. That was in July, that lowered the tariff to 20%. But then, of course, we all know now that we are all under the global tariff of 10%, which takes us back exactly to where the tariff was before Liberation Day. But what we saw throughout that whole dramatic year is that FDI kept rising. Last year, disbursed FDI reached all-time high of $31 billion US. So businesses I guess they see through the short-term volatility and policy changes, and also FDI is a long-term money. You know, once you go in and you build a factory and you have to see it through 5-10 years. It's not like hot money that can go into financial market in and out at the click of a button. These are long-term commitment, and they keep rising. And even to the first 2 months of this year, FDI has been 3 billion, and that is 9% increase year on year.
Yeah. I've got another sort of President Trump related question. How has the US-Iran conflict impacted the trust, and has that affected your portfolio planning in any way?
Yeah, so we are getting a lot of questions on this at the moment because, you know, all that we see on the popular news here is, okay, no oil is going through Strait of Hormuz, and 80% of Hormuz oil is destined for Asian countries, right? So therefore, Vietnam must be impacted. So Vietnam is impacted, but to a lighter extent than others, because we have a very diverse energy mix. So Vietnam, 30% of the energy source is from hydropower. Another 30% is still from coal. Unfortunately, we are transitioning out of it, but I mean, now it's become actually a good thing. 20% is from renewable, and only 20% is on oil. And out of that 20%, only part of it is imported. A large part of it is actually extracted and refined within the country. So we have energy independent. In fact, you know, in the beginning of this crisis, one of the things that we look into very closely is not just worried about price increase, but will we have enough energy to keep going? But at this point, we are confident that we have energy security in Vietnam.
Okay. Do renewables play any part in the fund? Is that in your thinking at the minute as well?
Renewable energy is there's not much opportunity to participate in that because a lot of them are not listed. Many of them are done by foreign investors, which is good for foreign direct investment, right? In fact, the UK, with its expertise in offshore wind, is quite a big participator in the renewable energy market in Vietnam. But certainly when they become available to invest in the equity market, it's definitely something that's worth looking at.
Yeah. So just talk me through what is the ideal Vail investment, and what's been your best performing stock and why?
Yeah, so it's very hard to say what the best performing stock has been, because you know Vail has been in operation for 30 years now. We have more than 40 stocks in the portfolio, which give the investor a broad-based exposure to the Vietnam economy. And there are some stocks that we have held for over 20 years. It's been in the portfolio, and they all perform at different times for different reasons. So, but right now, at this moment, we have the top position in the Vail portfolio is Mobile World, ticker MWG. And this is a stock that we have held for a long time and has performed well for us. But we continue liking it because it's it's a play not just on a great management team, with proven track record, but most importantly, it is a bet on the consumer economy. So MWG is a company that is a leading retailer of consumer electronic. They dominate their field. And then a few years ago, they use this retail expertise and expand into retailing grocery. And in that, they benefit from the fast expanding middle class with their changing spending habits. So people, when I was growing up in Vietnam, we went to the wet market every day. We buy just the food for that day, fresh every day. But now people have much more busy life, urbanization, busy job. So nobody goes to the wet market every day anymore. And MWG, they set up this chain, Bách Hóa Xanh, that sell groceries from a convenience store, so people can shop in comfort and in smaller portion because households are smaller now as well. So, they are really leveraging their proven expertise into another part of the consumer's economy, which and that chain, that part of their business is looking to IPO soon. Which lead me to the last comment I would make on on this topic is that we like IPO environment when there's when the economy go through a period of a lot of IPOs. Vail is able to deliver a superior return because of our standing in the local market. We are the biggest fund and the longest operating one. So therefore, when a company comes to the market, usually we get first pick and access to very good opportunities when there are IPOs.
Yeah. Thanks for that, Thuy Anh. The fund is currently trading at a 13% discount to net asset value. What are you doing to try and close that gap?
Yes, so from the asset manager side, we are keeping our heads down. We are trying to deliver superior returns. In Vietnam, we have a saying, "Hữu xạ tự nhiên hương," which means quality speaks for itself. So, last year we delivered 30% share price increase, and that comes from both net asset value performance as well as discount. And this year we are trying to deliver outstanding performance again. But specific to the discount, our board, we are very lucky because our board is very laser focused on controlling the discount. So they have been continuously buying back the share in order to keep control of the discount. They have a stated objective of keeping the discount, driving the discount to single digit. Earlier this year, we carried out a successful tender of 10% of Vail, and entirely at the discretion of the board, there might be another 2 tenders of 10% each.
Yeah. I'm glad you've brought me onto that because that's my next point. So you had a tender offer of 10%. There's a further 2 tranches of 10% if you feel like you need to go there.
At the discretion of the board, yeah.
Yeah, sure. And obviously this was as a result of investors with something like 41% of the shares voting to wind up the trust at last year's AGM, and clearly the tender offer was introduced to allow some investors to exit. The offer was heavily oversubscribed. About 68% applied to sell their shares, and it led to the departure of your former chair, Sarah Arkle. What can you tell us about that situation? I mean, it must have been quite a difficult one to manage. And are you satisfied now that Vail is entering a calmer period?
Right. May I just correct you on actually a couple of things. One is
Yeah, of
that
course.
the at the discontinuation at the discontinuation vote last year, the initial INS go out with 41% voting for discontinuation, but it was corrected later to a much lower percentage, but it was still more than the 20% necessary for the board to carry out a review. So that's one thing. The second thing is that Sarah Akol, our previous chair's departure, is not a result of the oversubscribed tender. Sarah's tenure as chair at Vail has been a very successful one. Last year, the Vail delivered more than 30% increase in share price. And that's not just due to net asset value performance, but also due to discount tightening. And as we probably all know, it takes so much more time to be a chair of an investment trust nowadays, right? So, it's entirely... Sarah left on a high. She left Vail in very good shape, having survived the discontinuation vote, and she and the board really serve investors, shareholders' interests very well in the run up to the vote as well as the consultation after the vote. Right. Yeah. So now let me address the point about the oversubscribed tender.
Yeah.
The oversubscribe of the tender is not unexpected things and also not a bad thing. The tender price is NAV minus 3%. And at that time, discount on the market, actually as it is now, is around NAV minus 13%. So if you can tender at NAV minus 3 and buy it back in the market at NAV minus 13, there's an opportunity there to make an arbitrage of 10%. Why wouldn't you do it? Therefore, it's rational economic behavior that people would subscribe to this tender, whether they want to actually exit Vail or not. In fact, we saw from broker data that there was some buying in the run up to the day of the cutoff where you can tender, and then after tender we see evidence of people buying back into the trust, right? Yeah. And then about the oversubscribe, if I'm an investor, I know that only 10% will be tendered. But I know that some investor may not, maybe they can be bothered or they're not taking up the tender. Then I would submit the maximum amount I can in order to get the maximum allocation from those that doesn't subscribe. It's like in any kind of syndication process or IPO process where you have to submit your bid, right? You just want to get the maximum allocation possible. So therefore, I think that is the correct way to look at the oversubscribe of the Vail tender. It's just rational economic behavior.
Yeah. So it was more of an arbitrage play on the price rather than any kind of dissatisfaction, is what you're saying.
Yes, that's what I'm saying about the. Of course, there are some people that want to leave, and then we are glad that they have the chance to leave at NAV minus 3%, and that's what the board initiate this tender for anyway. To support those that want to leave, but the oversubscription need to be looked at economically.
Yeah. Okay. Thuy Anh, thanks for that. It would be remiss to not talk about the investment of Sabah Capital as well, the US activist investor, which bought a 5% stake in Vail in November last year. Have you had any discussions with the management of Sabah, and what do they want from Vail?
So they, you're correct. They announced that they own 5% of the shareholder register, and the board welcomed them as they would welcome any other investors. To my knowledge, they have not asked for anything, but it's also that we cannot comment on any investor discussion.
Yeah, sure. I mean, obviously, you know what Saba's, what their strategy is. They seem to invest in investment trusts that are currently trading at a discount, and try to agitate for changes to the board and et cetera, et cetera. But you've not heard anything from them as we speak.
Correct.
Okay. What do you think about the regulator's review of UK listing rules on shareholder rights following complaints by some in the investment trust sector about the tactics of some activist investors like Saba?
Are you referring to the fact that the rule that if you own 30%, you can requisition, you can ask for vote again and again on the
Yeah,
same topic? Yeah.
I think the regulator's looking into this at the moment. I think particularly as a result of some of the complaints by some of the investment trusts.
Exactly. Yeah, I've been listening to the discussion on this as well. My view on this is that if it is, first of all, is that rule very different from the corporate world? In a normal company that's not investment trust. My understanding is if you have 30% of the share register, you probably can, table a vote. So anyway, the FCA is obviously looking into that complaint, right? But the long-term impact of all of this is that it will be better for investors, for things to get looked at and reviewed and strengthened where they need to be strengthened. So I watched this with interest.
Okay. Thuy Anh, just one last question before I let you go. How did you first get into the investment sector, and was there a particular influence on you when you were first starting out? Was there a particular person who mentored or influenced you?
As you very kindly introduced at the beginning of our chat, my background is very much in investment banking, and I only joined the asset management world 2 years ago. When I was working in investment banking in London and Hong Kong, I keep a very close eyes on my country, Vietnam, because I grew up there, and I've always been very impressed with the work that Dragon Capital does, right? It's provide a very valuable bridge for international capital and Vietnam economy. So Vietnam get the capital invested in its equity market through Dragon Capital from the beginning. Dragon Capital started in 95 and 94, and the stock market only started in 2000, right? So it was instrumental in getting this market going, and at the same time, Dragon Capital give foreign investors the chance to participate in this exciting economy through Vail, which is listed on the London Stock Exchange, and therefore comply with all the stringent requirement that entails. So when I had the chance to work with Dragon, I jump on it because I've always admire what they have done, and that's and the work of Dominic Scriven, the founder of Dragon Capital, is very influential, not just for me and my journey, but for generations of investors in Vietnam, and as well as the government. Actually, the government come to him for counsel and advice all the time.
Yeah, brilliant stuff. Well, Thuy Anh Nguyen of Vail, thank you for joining me on focusIR Fireside Chats.
Thank you very much, Karl. Thanks for having me.
Thanks for listening. Don't forget to hit that like, share, and subscribe button on Spotify, YouTube, or wherever you get your podcasts.